Just to let everybody know, we will be recording the webinar today. Everybody will get a copy of the recording as well as a copy of the slide deck that you'll be seeing. Those tend to be emailed out within about a week. If you don't get it within a week, feel free to email me and I'll make sure that you get a copy. I think we'll go ahead and get started. Our two presenters today, we have our senior mortgage consultant from Provident Credit Union. Her name is Lan Figueroa. And then we also have one of our preferred brokers. His name is Mike Mendenhall. All of their contact information will be available. And we will also have a question and answer period at the end. Everyone will be muted throughout the presentation. So we will go ahead and get started. Thank you.
Hi, everyone. My name is Lan Figueroa, Senior Mortgage Consultant with Provident Credit Union. I've been with Provident for over 20 years, specializing in residential mortgage lending. So I'll be available today to answer all your questions on the financing side. And I'll let Michael introduce himself.
Hi, everyone. My name is Mike Mendenhall. I'm a real estate professional practicing full-time real estate for over 40 years in the Bay Area. And I have been asked and am honored to be here today to help Provident with the real estate portion of today's webinar. Thank you. Okay.
So our goal today is...
Go ahead, Lan.
Go ahead, Michael.
No, I think this is you.
Oh, so our goal today is to assist you in understanding mortgage financing options. So we'll go over our pre-approval process, answer any questions that you may have about that process, and as well as our loan process once you are in contract. But you can ask questions along the way, or you can save them until the end. The other thing that we'll do is help you define your ownership objectives and how to achieve them. So Michael will walk through the process of writing up offers and how to submit them and what it takes to get your offer accepted. And we'll also demonstrate how you can buy a home for the best price with the most favorable terms, guide you through the home buying process, and help you understand what to expect when your offer is accepted. So steps to successful home ownership includes educating yourself about home buying, which is what you're doing today, so that's a great start. Apply and obtain a full pre-approval. So a lot of the offers, or most of the offers, if not all, should be accompanied by a pre-approval letter. Otherwise, the sellers often won't even consider your offer, and Michael can attest to that. We'll also go over summarizing your costs and what that would look like. Working with a professional real estate agent. We'll go over building your home search, find a home, and finally making an offer. So Provident has been around for many years. We've been specializing in the mortgages for more than 50 years. We have a team of processors, underwriters, funders, and even servicers, all under the same roof, located in our headquarters in Redwood Stores. Why choose Provident? So as I mentioned, we're a direct local lender. We do everything in-house, so that helps us move along your file very quickly. We have unique loan programs such as a movable mortgage, which allows you to take your mortgage with you to another property if rates continue to increase. We have a power funding program, which allows you to close in 10 business days, which is pretty outstanding considering how competitive the market can be sometimes. We have the Home Purchase Advantage program, which is programs that allows low down payment and high loan sizes for well-qualified borrowers with good credit and substantial assets. And then lastly, we have a planned development loan. If you're looking to purchase from a builder, we have programs to meet those needs, and we can go over them in details when we meet one-on-one. We've also received numerous awards throughout the years. So we do stand out as a top lender in the Bay Area, and many can attest to that. Next slide. So the pre-approval process, once you decide you're ready, starts with completing an application. Once that application is submitted, we will provide you a list of all the support documentation that will be needed to process that pre-approval. Once we have all the documents necessary, we can usually get the pre-approval done within 24 hours. And then the pre-approval letter that we issue will be valid for 60 days. So verification during the pre-approval process includes things like verifying your income, your credit, any debts that you may have, and assets that should be sufficient not only for the down payment, but for closing costs and to meet reserve requirements. And again, we can go over those in details once you are ready to start that pre-approval process. The potential sources of down payment will include anything that we can basically verify with 2-month statements. So these include gifts, savings, stocks, CDs, even overseas accounts and funds. You receive statements for those, and they do need to reflect US dollar amounts. Let's go ahead. Types of mortgages that Provident offers. So we're strictly a conventional lender. That means that we do not offer any government-backed loans such as VA or FHA loans. So the conventional loans that we provide include fixed-rate mortgages, which include terms ranging from 10 to 30 years. We also offer adjustable rate mortgages, which may be a better option right now because they do offer a lower rate than the fixed rate terms, especially with expectations for rates to drop in a few years. It might be better to get into a adjustable rate mortgage with the lowest rate and then possibly refinance down the line once rates do drop. Next slide. Now
Okay.
let Michael go over the estimated closing costs.
Thank you, Lan. And I also want to point out something that Lan said earlier, and that is you need your pre-approval as soon as possible. Reason being, the seller will most definitely have offers to choose from, and they will not choose, by advice of their listing agent, to work with a buyer who's not fully documented pre-approved. So want to get that going as soon as possible. So this is a buyer's net sheet or an estimate of closing costs. But before I start, I need to point out that in California, we have what's called customary closing costs. And that means that county to county, city to city, some fees are deemed to be a seller's fee or a buyer's fee, depending what city and county you're in. So this is, quote, fictitious because we don't have a real county here, but it gives you an idea of the fees that are charged and how sometimes we break it up differently. So in this one, particular county, the loan application fee is $0. And that's because Land's taking care of that. Thank you, Land. Lender fee, $9.95. And talk to Land about that cost and ways to get a better interest rate. She's there to help you do all that. Loan origination fee or points. Sometimes you will opt to pay a point or less or more, and points can buy your rate down. That's probably the most common thing I see people do with points. So it might be 1 point is 1% of your mortgage amount. It doesn't always cost 1 point. It might be less, it might be more. Again, a conversation to have with Land. Tax service fee, make sure your taxes are paid on time, $119. Credit report, $55 per person. And this is not the free online one that you get that's a consumer credit report. This is a more extensive credit pull, and Land can further explain that when you chat with her. Appraisal fee, this is for a third-party licensed appraiser to come out to the property after you're in contract so that they can appraise the value of the property and come back to your lender and say it does appraise for the contract price or maybe higher or maybe lower. We don't like lower because if it's lower than the contract price, your lender will default to the lower of the two. So if you're buying $1 million house in this example and it comes in 50,000 lower, the lender says we're not paying the million, we're going with the 50,000 less. So keep in mind that it's very, very important to have your real estate professional do a great market analysis so you don't run into any problems. Hazard fire insurance, SFR stands for single family residence, $1,000 a year for this particular property. But as we all know, California is having issues with insurance, mostly due to fire and floods. So you really want to look at the hazard map prior to writing your offer to understand if you can even get insurance, because some areas they're not writing policies, and what the cost would be. You talk with your insurance broker. PMI, again, putting less than 20% down, you're going to have private mortgage insurance. Is there anything you want to add on to that PMI talk, Lan?
Yeah, I mean, one thing to keep in mind, a lot of people think PMI may be expensive, but because we are a credit union, the companies that we work with do have special rates available through the credit union. And PMI is not something that you would be stuck with forever. Once you do achieve enough equity, you can request for the PMI to be removed, and it doesn't necessarily mean that you'd have to refinance the entire loan. If you have an adjustable rate mortgage, you can, if you are approved to get the PMI removed, we would just contact the PMI company and have them cancel the policy, and it just drops off on the payment. So nothing else changes. You get to keep the same rate, no extra cost to you, except for the appraisal to confirm the value.
Yeah, and I haven't seen PMI as low as it's been the last couple of years. It's just been really, really inexpensive. Impound accounts. So your monthly payment is principal, interest, taxes, and insurance, possibly a little MI. But you can pay the taxes and the insurance separately, but that's a hassle. What you can do is set up an account at Provident where you send in one monthly payment, principal, interest, taxes, and insurance, and they will disperse accordingly when the due dates come. There's no cost for that. That's a great way to go. I never have anything but impound accounts. It just makes life so easy. There's two one-time insurance policies, the CLTA and the ALTA. The first one, the insurance policy, is to protect you, the buyer, against clouded title. Clouded title means somebody comes along after you've closed the transaction, moved into your home, and says, I have interest in the property, meaning that they say they have evidence that somebody owed them money or they had part ownership. There could be so many things. You have an insurance policy that stays with you through the life of living in the property that's going to protect you. The other Alta title insurance policy protects the lender because they have interest in the property because they've loaned money. So two one-time insurance policies. And then the escrow fee, that's for the title and escrow company. The title, they provide the title insurance we just talked about. The escrow part of the company handles the paperwork, and they charge depending on how expensive the home is. So in this example, it's $1,200 to handle all the paperwork for a $1 million sale. Recording notary fee, just to make sure you are who you say you are, $300. Inspections. Now, these are the most common inspections. Termite inspection, looking at dry rot, wet rot, pest infestation, and plumbing leaks, $250. Roof inspection, $250. And now that inspection is going to tell us what maintenance a roof needs. And roofs every 5 to 7 years really do need some maintenance. Property inspection. This is for a property inspector, he or she, to come out to the property, go through the property from chimney to the foundation and everything in between, doing a visual inspection, open and closing, turning on and off, finding out the condition of the property. Once we have all three of these inspections, your good real estate agent can sit down with you and say, okay, this is what I see going wrong in 3 years. This is what's going to happen in 7 years. And here's some recommended upgrades just for safety and health. So really wonderful to have these inspections. Generally, the sellers will have all three or at least a couple. Sometimes we don't like their inspections. Other times they don't have all the inspections. And then it's on you, to the buyer, to get those inspections. Then there's different charges in each county and city. In this city and county, we have a $1,650 city transfer tax, an $1,100 county transfer tax. And since we're not closing at the beginning of the end of the month, we're going to have interest for the days that we get the money. So we're getting the money on the 15th day. We're going to owe 15 days of interest. It gives us a grand total of $12,701 to close this transaction in this particular county. Now, if you would like to know who pays what in the areas you're looking for, just contact any one of us and we can give you that breakdown on who pays what. Okay? All right, when I sit down with home buyers, and it doesn't matter if they're a first-time home buyer, they've bought many houses, we still have to have the discussion of what you're looking for. So the first question I always ask is the number of years you plan to occupy the home. Sometimes as a first-time home buyer, that's a little difficult, but we just try to get a rough idea. So if you said 5 years, I would write the number 5 at the top of this page, and then I would ask the questions going from left to right, and the first one being bedrooms. So I would say, how many bedrooms do you require for the 5 years you're going to live there? What would you desire? What's neutral? And what's a negative search you don't want? For each and every part of the home. Now, the list is much longer than it looks here. We go through it pretty much in detail, the entire house. We realize that as you look at properties, things will change. So we're constantly updating the search criteria. This search will come to you 24 hours a day, 7 days a week. If there's a price reduction, you'll get the house again coming to you as a price reduction. It's a great way to stay on top of things, but more importantly, it's a learning tool. You're going to quickly learn what you're paying for. So for instance, you say, I want a separate family room. Then you find out all the houses with separate family room are out of your budget in a particular area. You might say, wow, that extra room really adds a lot to the price. Maybe I'll pass on that. So we're constantly fine tuning. If you go down to the middle of the page, this is probably where we spend the most time, under appliances and systems. Oven ranges, how big, how many burners, gas, electric, induction, heating, air, excuse me, heating and air. So heating and air is really, really important. People have allergies, so we need to know about those because there's different types of way to condition the air. There's gas, oil, electric. There's all kinds, radiant. So we have that discussion. Now, washer dryer is a big one. Many, many people want a washer and dryer in their home because they haven't had one as a renter or they're going to a coin-op, really a hassle. Well, all your single family homes, for the most part, will have a washer and dryer, but perhaps you're not going to be buying a single family. You're going to buy a condo or a townhome. Some condos and townhomes do not have in-house washer and dryers. Sometimes we can add them. That's our job as the agent to find that out. Other times they're not allowed, and just pass on that complex and move on. Okay? All right, second page here. If you look at the top left, we have roof. Now, roof is real important because it's the thing that protects us from the sun. It keeps us warm, it keeps us cool, and also it needs maintenance. But they have a life expectancy. So if you're going to live there 5 years, and let's say it's a single family home, because an HOA takes care of the roof on condo and townhome, you're going to want at least 10 years remaining on the roof so that you can sell the house when you get ready to sell and not have to install a new roof. So really important to get the remaining life expectancy of the roof. Then we talk about siding, what you like on the outside of the home, wood, brick, stone, how big are the yards, the frontages. Do you really need a big lawn out front? Do you like to be closer to the street and have more of the yard in the back? And then there's the thing that most people don't want anymore, and that is a pool. 40 years ago, everybody wanted a pool. It was the thing to have. Well, fast forward to today, and it's really a small number of people that want pools. They don't want the hassle. They don't want the yard taken up by the pool. There's so many reasons. So if you're looking for a single family house, remember this: pools bring down the value. So unless you have a huge lot where you can have a fenced off pool and still have a big yard for entertaining and playing and having outdoor barbecues, if it's a regular city-sized lot, guess what? The pool is the backyard, the value drops. So I sell a lot of houses with pools every year where we remove the pool after the close of escrow, and the cost of removing the pool is not that much compared to how much we save on the purchase price of the home. So you'll find that pools generally sell for a lot less. And if it's really big pool and really eats up all the yard, guess what? You might be the only offer there and get a great deal. Then we talk about neighborhoods, architectural style, price range, homeowner associations, and commuting times. I like to find out where people go on a regular basis during the week, because we would like to put you, if at all possible, in an area where you will not be on the road that long. So if we could ideally get you, say 30 minutes from work, 30 minutes from where you're visiting relatives, whatever the case may be. Okay? All right, most of you will be looking at either single family homes, townhomes, or condos. So let's talk about single family. They share no common walls. generally includes a front and rear yard, although newer single-family homes tend to not have yards anymore, a lot of them. Owners responsible for maintenance of property inside and outside. The owner pays all insurance costs. So simply put, you're in charge of everything. You control everything, you repair everything, and if you can't repair it yourself, you pay someone to do it. So you're the foreman of the ranch on a single family home. There's nobody there to assist you who isn't getting paid. On the right, townhomes and condos, a little different. They share common walls. There's monthly homeowner association fees. Now that's to take care of the roofs, the siding, the painting, the common gas, common electric, all that stuff. And the maintenance, the next one, cover exterior grounds and building maintenance. The HOA generally pays for the master insurance coverage. So that means part of your monthly HOA goes towards insurance, which is really important. Now, before we go forward at all to look at any townhome and condo, we want to review the financial health of the HOA. It's not as simple as a single family home. It's real straightforward what things cost. In the townhome and condo, we want to find out that the management or the HOA itself has been really managing the financial health well. And the most important thing we look at is reserves, because reserves are where we tuck money away for future big ticket items. So for instance, if we know we're going to have a roof in 30 years, we want to start saving today from day one to be putting into that common reserve fund so that we will have the money when we dip into it. Really, really important that you look closely at that. Okay. Okay, everybody eventually asks, where does the inventory come from that goes on the multiple listing services? Well, the first one is foreclosures. Now, foreclosures are lender-owned property that's been taken back, and there's special forms required. It's different than our typical transactions. And there's a big myth out there that foreclosures are great deals. It could be a foreclosure and be the best deal. It could be a foreclosure and be the worst deal. It really doesn't matter that it's a foreclosure. Just look at properties, no matter what the source, and then if they need special forms, we'll help you through that. Underneath that is corporate transfer. Corporate transfer is when a company relocates an employee, and usually it's a promotion, and there's special forms and mandates again to handle that sort of sale. I actually really like corporate transfers. They generally happen between September and December. And what's really cool about them is the people that have been living in their, say, 40, 50, 60 plus year old homes in the Bay Area have probably been updating them, not thinking they're going anywhere. And suddenly they're yanked out of the state or city to some new location, and you've got a property that has all these upgrades in it. That is a fantastic purchase. So September through December for corporate transfers. Probates, anything to do with the legal system of the state of California, and that can be anything. It could be a divorce. It could be a breakup of a partnership, so many things. But if the state's involved, just remember, it's a lot different. And if it has to have court approval, you really want to have a good realtor because you don't want to lose your deposit. And many of these deposits are 10% as opposed to the 3% that we normally have. Conventional listing is anybody trading up, down, or sideways for whatever reason. The family's shrinking, the kids are gone, let's get a smaller place. Family's growing, let's get a bigger place. We just call that conventional listings. Okay? Here's a sample of a listing that will come to you through my search software. It will come to you 24/7. And what you want to look at first is up on the top right side. It's a 3-bedroom, 1-bath, 1,200 square feet, 5,000 square foot lot. It's 71 years old. First thing I'm going to tell you is we don't believe any of that. That is what's there now, but how did it get there? Well, because I already know, let's go down to the bottom where there's a paragraph, and that's called the public comments. And you'll see down about 1, 2, 3, fourth line down, it says 3rd bedroom without permit. Okay. So what that means is they built that bedroom and now they're calling it a 3-bedroom, 1-bath, when in reality, in the eyes of the city and county, it's a 2-bedroom, 1-bath. And more importantly, when the appraiser goes out there, they will not give value to that 3rd bedroom. So we have to realize that this house will need to be evaluated as a 2-bedroom, 1-bath. Great that it's got another bedroom. It could be built really well, but if it's not permitted, does not add value. So we always have to take everything with a grain of salt. Okay? All right, here's some of the comments that you're going to see in those public comments over and over. I'm giving you some of the more common ones here on the left because we're going to see these a lot. First one is TLC. All the property needs is little TLC. You have to understand that that is a real estate agent trying to be as careful as possible not to offend the seller, but still letting us know that there needs to be some work done. And generally TLC, buyers think that means it needs to be painted. Sellers know that it means, oh, wow, you need to gut the kitchen, you need to gut the bathrooms. So it's generally a lot more than TLC would imply. Great for first-time home buyer or investor. That means it's probably a 50-plus-year-old home. Not much has been done to it to update it other than things that had to be done. So it's okay, but it needs all updating. Well, the first-time home buyer will look at that and say, that's an opportunity for me because I'm handy to buy this property, update things over the years, and then when I sell it, I'll sell it for a lot more money. And they would be correct. The investor looks at it and says, I'm going to buy it as is. I'm going to rent it for 10 years. Then at the end of 10 years, I will completely remodel it and put it on the market. Both of them have interest in that same property. Contractor special, okay, or fixer upper. Both of those generally implies that you cannot obtain a loan. They are in such poor condition that they do not pass health and safety certification. So we really need to do a full remodel on these. And you're going to have to pay all cash because lenders are not going to loan on that. Okay, if you want move-in property, look at the top right. Look for recently remodeled, new, renovated, and move-in condition. Those are all generally saying, gosh, we just did everything to these properties, come check them out. You may not like the floor plan, you may not like the color, but they should be in fantastic shape, okay? Okay, now you've been using the software to get the searches, the properties automatically sent to you. You've been going out and looking at property. You've been tweaking the searches, saying, you know what, changed our mind. We don't want this area. We really want to focus on these 1, 2, or 3 areas. We've thrown out townhomes. We're only looking at condos, whatever the case may be. You have really narrowed it down. This means you're ready to buy. That's when you shift into looking at homes 24 hours a day, 7 days a week. Now, realize obviously we can't get in 24 hours a day, but the deal is houses do sell in a day. So now you have to really stay focused, maybe go before work, maybe go on your lunch hour, go after work. Whenever you can get into these houses, you want to view the listings as soon as possible because some of these will sell out from under you. Next, you want to try to meet the owners of the homes you view. Owners are starting to stay in their properties now, unlike during COVID when every property was vacant. I'm finding that there's still a lot of vacant homes, but the owners are starting to stay. If you have the opportunity to meet the owners of the homes, make a point, go up, introduce yourself. It's really important. If a seller can associate a face and a name when they're looking at a purchase agreement that comes to them a week or 2 later, they're really going to warm towards it. Sellers like selling to people that they've met. It's really, really one-on-one. It means a lot to them. So try and meet the owners. When you're at the property, look in, under, and over when viewing a home. Yes, there's inspections, but remember this. There's things that the inspectors aren't looking for that may be important to you. So you really want to take your time when you're going through a property. If you start to say, I might make an offer on this, we're going to have to do another walkthrough, which I'll talk about in a minute. Put on shoes that can slip off and go back on pretty quick. COVID really put us into the mindset that everybody takes their shoes off when entering a home. You're going to find that's 95% of the property. Your choices are you have easy slip-off shoes, or you have to wear those shoe coverings at the door, which are, my way of thinking, pretty disgusting after a weekend. Do not bring a crowd when viewing. When you're first going out looking at properties, you want to keep it intimate, you and your agent. The reason you want to keep it intimate is you do not need the distraction of family, friends, or coworkers chiming in when you're trying to focus. If you find a property you really like, we can go back with the family, friends, and coworkers. That's not a problem. But in the first visit, really try and keep it intimate, okay? Okay, when you're walking through the property, please do not make negative comments about the home you're viewing. Now, most of you probably will not make negative comments. You'll just say it's not for us. But here's the deal. When people like properties, they tend to ask questions about remodeling while they're in the house. They might say to me, Mike, would it cost to tear down this wall and redo the kitchen? I understand that's a buying sign. You're saying, I like this property. I'm just considering buying it and changing some of the things. Keep in mind there's a camera in the home. Whether there is or isn't, just assume there always is, because most people have these little cameras and they're hearing everything you say. Now, when you asked about tearing down the kitchen wall, that was because you like the place. That's not how the sellers hear it. They hear that as a negative comment about their property. So I always tell people, write down things that you want to ask me outside away from the cameras. Again, don't bring the crowd when viewing the homes. If the camera's on that, they don't like that either. Don't use the bathroom in any home you are viewing. Okay, we're not supposed to use bathrooms. More importantly, people tend to default to, it's a vacant house. I'll just slip in and use the bathroom real fast. A lot of times in the vacant houses, they shut the water off. Oops, big mistake. So keep that in mind, guys. We're happy to stop at Starbucks or any place else, but try not to use the bathrooms in the homes. Okay. All right, so we're back to you like the property. We walked through it. I can see in your eyes, you're saying to me, uh-oh, I really like this place. I'm going to say, let's turn around and walk through again. And what I do when I walk you through is I turn everything on and off. Let's really see, is this oven gas? Is it electric? How many burners? How big are the burners? Everything you can think of in a kitchen. Open all the cabinets, put 3 people in the kitchen, see if you could still have 3 people in the kitchen when you're cooking. Just take your time and go through it a second time. I go through everything: oven, microwave, dishwasher, disposal, trash compactor, heating and AC equipment. 30 minutes at the house now, you may say, gosh, I changed my mind. I was ready to say I'm ready to make an offer, but now I'm not. Or it might go the other way and you're really happy with what you see. Okay. All right, comparative market analysis. So you found a property you like. That's great. My job right now is to show you what similar homes in that neighborhood, hopefully the same schools, are selling for, and they're very similar. That's why it's called a comparative market analysis, or CMA. So what we want is properties that are a minimum 3-bedroom, 1 bath. Why? Because the active listing at the top is Shoreview Avenue. And so we're going to say, okay, we need to look for houses that have recently sold similar. Well, if you go down below solds, you'll see I came up with 3. They're all 3-bedroom, 1 baths, perfect matches. And they're all around 1,000 square foot. One of them is 1,040. And unless I see some sort of addition, I question that 40 square feet. I would really scrutinize that one. But what's really cool is we have the sales prices, okay? All the way to the right on the sold, you see the sales price. It's 1.6 is the high sell, 1.210 is the low sell. Big difference, but that's called the window of value. You've got a high sell, a low sell, and whatever properties are in between the high and the low, a window of value. Now, what's really cool is behind this cover page is there's going to be all the photographs of the properties when they were on the market. So you're going to have the inside photos, the outside photos, so you can really compare and contrast the condition. Maybe the one that sold for the highest at 1.6 probably had remodeled kitchen, remodeled bathrooms, probably updated completely throughout, where the one down at the bottom, 400 something thousand dollars less, is probably very original. And now you have to compare it to your listing on Shoreview Avenue that's for sale. And you also get maps. Are they on busy streets? Are they on quiet streets? All of this we're going to compare. And then we're going to talk about value, what we think the listing is worth compared to the sold property values. Okay? All right, California purchase agreement. We're going to write an offer. The 2 most common offers used in the Bay Area are the CAR or the PRDS. Now, the CAR contract, standing for California Association of Realtors, is used most commonly throughout the whole state. PRDS is generally something that stays around the Bay Area. Both of them are good purchase agreements. If anybody would like a sample purchase agreement now, just shoot me an email and I'll send one out to you. I think it's really valuable to review the purchase agreement before you ever even start looking at property. And you won't be so intimidated by it. You'll say, I pretty much understand what they're asking us here. It's just simply asking us questions and we fill in the answers. You want to have the most recent revision date. And if you're working with a new agent, you want your new agent to have the broker of the office review their offer and initial at the bottom right. You can't see it here too clearly on the front page saying this has been reviewed by the broker and they've given it the good seal health. Boom, it's good. Then you're going to talk about contingencies. And contingencies are, you want to offer, so let's say $1 million, but it's contingent upon something. It's contingent upon inspection contingency. You didn't like their inspections. They were missing some inspections. Something needed further inspection. Then we have an inspection contingency. Financing contingency you shouldn't need because land's going to put together a fully documented pre-approval, so you probably wouldn't need one of those. The one that's missing here is appraisal. Appraisal is a big question. If you do not have an appraisal contingency, it means that if the value comes in less than the contract price, you, the buyer, are responsible to make up the difference between the lower appraisal price and the contract price. Now, sounds a little scary, but once you do enough market analysis, you'll realize, you know what, I'm pretty safe here. And if it does come in lower, it's only going to be by a small amount. If we're uncertain, we'll tell you as the agent, wow, there's not good comps here for that. I would definitely not go in without an appraisal contingency. If you have an appraisal contingency, then if it comes in lower, you have the option to walk away, no penalties. You can renegotiate with the seller, all the above. Okay? All right, so the offer process, once the offer is put together, you and your realtor will decide what to offer, discuss possible contingencies in offer. Your realtor will present the offer. You do not go to any presentations. Most presentations nowadays are done on Zoom. Seller will respond by accepting your offer, rejecting your offer, or making a counter proposal to your offer. You can accept, reject, or counter the seller's response. Generally, we don't go back and forth most times more than once, maybe twice. If you're going back and forth, say by the third time, people are getting a little sour about that and probably is not going to go together at that point. You can make multiple offers in a day in California on different properties. That's legal and it's ethical. So, feel free to make as many offers as you want. It's our job to construct contingencies in such a fashion that if 2 offers are accepted, we can have the possibility of canceling one or both. Okay? All right, finding the right real estate agent. Well, it'd be great if you could work with someone with a lot of experience, but let's just say it's your sister-in-law. She just got her license. Hey, she's new in the business. That's all right. She's going to be very energetic. She's going to have a lot of time. She's focusing on you. Okay, so the only thing we want to say there is make sure the managing broker or somebody high up in the office with lots of experience is going to put them under their wing and watch and review everything they do. But as far as showing properties, it's great. You'll have a great time. It's in your family, but make sure someone in the office is overseeing anything that's put down on paper. Okay. Then one of the questions you want to ask experienced people is, how many homes did you sell last year? You might have been in the business a long time, but maybe you're not working full time. Maybe you're only selling a couple houses a year. I would rather have someone who's selling a lot of homes. Next, if you're a first-time home buyer, really, really important that you let them know you're a first-time home buyer and do they have the time to work with you. The reason I said the time is because first-time home buyers require a lot of hand-holding, a lot of time, and it's got to be an agent that likes to educate people because the consumers today aren't happy unless they are, they are educated to a point that they know as much as the agent they're working with. During your meeting, you want to establish goals. How often are we going to look and rebuild the search? What days and times are we going to go out? What kind of properties are we going to focus on? And let's develop a timeline, fictitious or not. You say, I want to be in a house in 3 months. Well, then let's stay busy if it's going to be 3 months. If you say, we're not going to buy for a year, you don't have to be as focused. Okay? All right, your offer is accepted. What happens next? Well, most offers take about 30 days to close. Some are faster, some are longer for many reasons. But once you're in escrow, that simply means you're in contract, everything and everybody starts to happen. So what happens is your insurance carrier, the title company, your real estate agent, your lender, everybody's giving you documentation to review and pushing things through to get the transaction closed in 30 days. But you are at the top. You're the CEO of the whole transaction. Even though you're like a CEO, you don't know what's going on, neither do CEOs, but everybody underneath them knows what's going on, and they are pushing information up to you, the CEO, for you to approve. So really important to remember throughout this entire process, you're in charge, even though you don't know what you're doing, we're there to help you understand. And we will get you through all the mountain of paperwork, okay? And this is what an escrow task list looks like to me. So when I get up in the morning and go to my computer, I see what's got to be done. And this is not just one property. This could be, 4 properties that are in escrow, and every one of them has something going on. Now, you don't need to see everything there. You just need to see the things that you have to sign and approve. And we will explain to you in detail anything we're going to ask you to sign. Okay? Until you get to the moving day. Well, we just walked you through a little fictitious purchase. Lands explained how you need to meet with her first, whether that's just over email, in person, however you guys want to do it. Putting all your financing together, making sure that you're ready when you start to look at homes. And remember this, as recently as 2 weeks ago, I had a home buyer that I had a Zoom call with I told them to get their pre-approval. They didn't. Then they went on vacation for a week after we talked. Then they got back, fell in love with the house 2 days after getting back, and didn't have an approval, and offers were the next day. Can't make an offer. Listing agent said, I'm not going to review an offer that doesn't have a pre-approval. So pre-approval is something you want to hold on to. It's easy to renew as time goes on. Okay, and if anybody would like a referral to any agent anywhere in the United States, just need to let me know what city, what location, and I can look up their DRE numbers and their background, their specialties, and I can give you a good contact. If you want to talk about real estate in the Bay Area, I can talk to you about that. Outside the Bay Area, I don't know anything. Even though I'm licensed to sell everywhere in California, it'd be crazy for me to represent someone in areas I don't know.